those of you who might have joined us for the book launch this evening about everything you want to know about stock market investing. May we invite you to kindly make yourselves comfortable and please join us at the chairs as we are about to commence this evening's celebration of the book launch. Good evening and a warm welcome to one and all who have joined us this evening here at Crossword. Before we take this evening any way further, I'd like to share with you that Crossword aims to be a point of social and cultural interaction, a place where authors and poets hold court, children are regaled, and people, just like all of us, gravitate to be informed, entertained, and once again, even enlightened. This evening, we all look anxiously forward to the launch of the title, Everything You Want to Know About Stock Market Investing, which comes to you in association with CNBC TV18 as publishers, Network 18, also in association with Kotak Securities. And what makes it very special is that I would like to invite you one and all to please put your hands together and invite our panelists and join them to receive them with a very special round of applause in Mr. B. Gopkumar and Mr. Dipen Shah. Thank you very much for joining us as a panelist this evening. You'll get to know more about the book and more about our very eminent panelists very shortly. But firstly, I'd like to share with you a few ideas and thoughts behind the book, which will be launched very shortly here at Crossword. Something about the book, Everything You Want to Know About Stock Market Investing. After witnessing the phenomenal rise in the prices of stocks over the years, despite large and small dips in between, it is now commonly accepted that the stock market is the best place to enable one's fortunes to grow. But what is less accepted is that it is not complicated. There are many people who simply refrain from investing because they are afraid of the jargon that they hear about the market. Others are cautious because of the stories of losses. These meted by the market, which of course long sustains and keeps floating about. Still others are just not in the market because they lack the time that needs to be there to be an investor and understanding the markets. The book is part of an initiative to educate investors who are sitting on the sidelines wondering whether they should invest in stocks and how they should go about it if they really do finally. It covers everything from financial planning and asset allocation to the steps that will launch you into the equity trading and the processes involved in purchasing shares through the IPO. It introduces you to techniques that will help you select stocks, explains how you can undertake fundamental analysis and use technical analysis. It even instructs you on how to calculate the taxes that are applicable when you invest or disinvest in stocks, and last but not the least, it tells you how you can arrive at the absolute returns on your stock holdings and reminds you about the importance of reviewing your portfolio from time to time. Now the icing on the celebration, if I can so say, is that we've got two more eminent panelists. Apart from the information, what you're going to find between the covers of the book, this is your opportunity to be also, after hearing them, in the very exclusive question and answer segment, to be posing your questions right from anything basic that you'd like to know to the typical jargon of the stock market. So I'm going to steal this opportunity to share with you a few words about our guest here at the table, Mr. B. Gopkumar. He very importantly would like to keep his profile very unassuming, but I have to share with you, he's presently the Executive Vice President of Kotak Securities Limited. And we have with us also Mr. Dipen Shah, who heads the Private Client Group Research Division of Kotak Securities Limited. He's an analyst and his views are much sought after in the industry. He was with Dolat Capital prior to that, BCom and a CA from the Institute of Chartered Accountants of India, has 12 years experience in research, and more importantly, these two fine gentlemen have taken the time out from their busy and hectic schedules to share it very live and exclusive along with CNBC TV18, Kotak Securities, and with all you fine people out here at Crossword. So a big thank you at the very onset for your valuable time. I would like to invite our gentlemen at the table in Mr. B. Kumar and Mr. Dipen Shah to firstly get your hands onto the covers of our book, everything you wanted to know about stock market investing, and kindly do the honor of unveiling the copy for us. Avid readers, customers, and investors of the stock market, may I request you to kindly put your hands together and let's receive the book out here. Everything you want to know about stock market investing, published by Network 18 Publications Limited, part of CNBC TV18, in association with Kotak Securities. Yes, presenting to you everything you want to know about stock market investing. Congratulations to CNBC TV18. To take this evening forward with the book launch, firstly, we'll have a few words from our guests at the table, and thereafter I'll throw it open to the house where we'll be inviting questions from the audience and we'll respond to the same. And please don't forget we're looking out for these interesting questions because we've got complimentary gifts, which means the books, copies of the books to be gifted out to those who come forth with those interesting questions. And we'd like to have them all from you. Over to our gentlemen at the table.
Thank you very much, and ladies and gentlemen, before I get into the book, I just wanted to give 2 or 3 perspectives of wealth creation. I think that's an objective behind the launching of this book. Largely, if you look at the way the investing is done in India by the investors, especially the retail investors, you have only 4 asset classes available in India to invest, which is equity, debt, commodity, and real estate. But if you really look at from a retail participation, largely you find people participate from equity and debt. Equity, people participate through mutual fund, people invest through direct equities, they use some instrument which is almost equivalent to an equity market, which are called structured products in place, and people also participate through a portfolio management schemes. That's purely for a equity investor. Second, which is important, is the debt investment, which people participate through FDs, the debt instruments like mutual fund, debt schemes, FMPs. So people participate largely. But if you really look at from an equity perspective, I think people fear to invest directly, and people also pay hefty sums of commissions and fees to the fund managers to manage portfolios. And just because one is that lack of time and lack of knowledge. I think what we're trying to do here is that we have 2 sets of people who are the intermediaries in the market. One is the regulator and the stock exchanges. These are the 2 people, and we have intermediaries like us. So these 2 people in the industry is trying to create education levels to the retail investors, and we want the participation of the retail investor to go up. So that's where it is. And again, if you really look back last 15 years, what has happened in the markets today is that the technology has helped to take people to masses. For example, I still remember in my days, 96, if I own a cell phone, and I used to pay 18 rupees for an incoming phone and incoming call and 7 rupees outgoing. And look at the way the telecom industry has created a revolution. I think the revolution has just not happened just because the handset price has gone up or airtime price has gone down. I think it's mainly because the way the telecom companies went around and educated people on in terms of how to use mobile handsets. I think that's where it has happened. And there's huge technological revolution happened in telecom space, whether it's internet space or the telephone space. I think that's what happened in the equity markets. If you really look at 15, 20 years back, there was a ring system where only elite citizens of India participated in the ring. From there, we moved to electronic trading, where the rings were abandoned and people went on an online mode. From there, it went to an internet model, where people went and started trading through internet. Today, the era has come on mobile trading. I think all these 4 or 5 revolutions happened in the span of 15 years. I think that's what is pushing the retail participation. And we as intermediaries, what we're saying is that exchanges and the regulator is educating the investors today, and our role as intermediaries, as the brokers, we want the retail participation to go up. This is one of the objectives where we associated with CNBC TV18 and said that why can't we have a book which is simpler, which can demystify the jargons, theories, because people are scared when it comes to markets, because when they look at the specialists or analysts who come in the TV media, and they get scared because they talk about P's and they talk about EPSs, and people still watch it. I don't know. I've got a high TRPs from 9 to 5. I see people watching it, and if I go and ask them, do you know what is this? They don't know. They just say the kya price hai. I think what is behind this price and how the price movement happens, I think that's what we're trying to demystify in this book. Now the important part of this book is very interesting is that unlike a book, we made it as a workbook so that there is some level of education is there. And it also comes with a free account opening. So if you buy this book, you will get an account opening free, because typically every broker charges you 70 rupees to open an account. But here, this book comes with a free account opening kit. So in that sense, the complete book, it's an initiative from heart that we want to make sure that it goes to the masses. That's why when CNBC TV18 came to us and said, why can't we participate in this? And CNBC TV18 is the premier business channel in India, and I think we as market leaders, I think it was a right way to look at it. So we said that we will participate together and create an awareness for retail participation in the market. So this book covers everything about markets. It also covers a few concepts on financial planning, which is very required, because it is not that every money has to go to stock market. Stock market, you can also invest in debt schemes. So that's what it is trying to do. I think it is well covered. It is done, I think we worked almost 6-7 months, right, to get this book out. I think we should have a copy of this book. I think it's available in the stands now, and it's already, I hear that it's a bestseller in Crosswords now. I think I'm looking forward to making this successful. And what we're trying to do is that next we'll have 3 more editions. We will have it in Gujarati and Hindi edition, which we will come in the next 2 months. So I think we will cover 60-70% of the population. I think now Hindi has become a national language. It's a national language, but everybody now speaks Hindi fluently. So we'll do that. That's all from my side, and Dipen will take over from me, and we will also take 10 questions. It can be related to markets. If we are able to speak on particular stocks, please don't ask us for stock tips, because you need to go back and read this book and come and ask me for a stock tips. Okay, that's what. Thank you very much. Thanks for coming in again. Thank you.
Right. Thanks, Go. Thanks for the opening remarks, and gives me great pleasure to once again welcome you all. And thank you all for taking time out and coming to this launch occasion. I am Dipen, and as has been introduced, I am on the research side, the Senior Vice President. And once again, welcome you all to this launch session. As I said, of this book, everything you wanted to know about stock market investing. And in my opinion, this is one of the most lucidly and simply written books which I have seen on stock market investing. Removes a lot of jargon, addresses a lot of jargon, removes a lot of doubts, gives various avenues of how to look at stock markets and make money, and should definitely be a book worth investing into and owning. So with that brief comments, I will not take too much time either speaking on the book or the reasons for that. Let me just take this opportunity to speak a bit on markets, what we feel about it. This has all been brought about, or the decisions which we have come out with, or the recommendations are all a reason of the process which has been followed by us, which has been enumerated in the book. And I will also take you briefly through what we do day in and day out, which is fundamental research, and why it is more important. So it's just a part of the various techniques of investing, and I feel it's one of the best techniques which is available for long-term investing and creating wealth. So that's basically what I will do and try to demystify in the next maybe few minutes. Speaking more on the markets, let me just say that markets have been pretty much volatile, to say the least, in the last few weeks and few months. We have seen benchmark indices, that is the Sensex and Nifty, fluctuating by 1 to 3% or 4%, 5% on a daily basis, which is serious by any standards. And going more deeply down, or looking more at stocks, we have seen that stocks have gravitated, or in fact fluctuated significantly by 10 to 20% in a day. any person who is invested a lakh of rupees, for example, today, next day can easily see the wealth going up by 20,000 rupees. But more concerningly, he can also see it going down by 20,000 rupees. So that's basically a scary situation as of now what we are facing. Just briefly into the reasons why we are doing that, or why the markets are doing this. There are both factors, domestic and international. This is just taking you slightly deeper into the reasons behind the stock market movements. There have been domestic factors like the inflation and the interest rates, the various bribery scams, the various corruption issues which have come about. Also, we have got international factors like the recent Japan issue, but more importantly the issues on the crude oil and what's happening in countries like Libya and what is expected to happen in countries like Bahrain, etc. This is all in the backdrop of the kind of significant volatility which we are seeing in the global economy, and we being interrelated or interconnected to that economy in a major way, we have also been impacted in terms of stock price movements. So when we look at all these factors, it really becomes a scary scene for a person who is not investing into equities right now. And the general refrain or the general conclusion is it's better to stay away from the markets rather than jump into it right now. So is this the right strategy? That's what is the big question. Is it the right strategy to just stay away from the markets because of these factors and because of the data which is coming in, the news which is coming in? Or is it a good strategy to develop some information out of this news and data and use that information to make significantly more amount of money which can be made in this kind of a crisis situation? In our opinion, it is the second option which is a much better option. It is not right to stay away just because of the factors and the news which we come across. It's basically better to dwell more into this news, dwell more into this data, try to find out some of the reasons, do some more fundamental research, and then the information which can be derived or conclusion which can be derived, use that conclusion very effectively to make gains in the markets. So that's basically what we feel is the role of fundamental research. It tries to clear various clouds. It tries to show a direction when there are significant clouds into the atmosphere and when the visibility about the markets is pretty much low. So we have done this, and the conclusion which we have arrived is that this is probably the right time to invest into the markets over the next 2 months. The next 2 or 2.5 months probably the markets will remain range bound because of the factors which we just mentioned. But beyond that, we see that the market should trend higher in a sustainable manner. This is obviously based on some assumptions and the studies which we have done. So certain factors which are not within our control, we will leave them aside, like what happens in Japan tomorrow, whether the 6th reactor has a blast or not, we all don't know. And also what happens in Libya and Bahrain is something which is difficult to say. But assuming that these factors remain pretty much benign, we believe that domestically positive things will start happening over the next 2 to 3 months, more on the reform side, more on the government action, more on the inflation rates coming down, and to that extent the pressure on interest rates also moderating. So when we look at these factors, we believe that this next 2 or 3 months should be utilized as an opportunity to get into the markets. There are obviously several stocks and several sectors which will do better than others, and once we do some more fundamental research, we can identify those stocks and sectors and make significantly good money over the next 9 to 12 months, which is the time frame on which we should be investing in. So that is briefly on the markets and our view. Something more on the fundamental research, like why we are advocating that. The 2 or 3 main reasons why we are advocating fundamental research, or at least why we do fundamental research, is first is the distinction between wealth and income. Short-term trading will create income for you, but long-term investing creates wealth for you. We have got people like Warren Buffett and the Grahams of the world who have made fortunes, significant fortunes, by doing fundamental research. So that's the first and foremost reason for doing fundamental research and why we advocate that. The second one is that we can witness significant amount of price increases or reductions based on some events which are happening or expected to happen. Now these events, if we are able to foresee and if we are able to forecast, then we can make use of this or we can actually forecast them and take action. And because of when the event actually happens, we can see that the gains can be made, significant gains can be made based on that event. But to forecast that event, we need to do some study. We need to find out as to what can be the factors which can lead to those events. And once when we do that kind of research, we can forecast that event and make significant money. So that's the second part. And the third part, as I spoke, is trying to convert data and news into information. If we just rely on news, we can probably do some short-term trading because of particular news which comes. And there, if we are not able to decipher the news properly, then we can more often than not make losses. But if we try to convert that data into information, try to use it very effectively, and then make our decisions based on that information, we have seen that time and again we have made significant amount of money based on that pure research and pure information. So these are some basic reasons why we feel that fundamental research is good. It is not that we are negative against any other techniques of investing. For example, technicals. They are also effective tools in terms of investments. They allow us to time the investments or entries and exit better. And to that extent, used effectively along with fundamental research, technical investing also can allow us to make good amount of money. So it's nothing against any other techniques of research, but we feel fundamental research is a method of creating wealth, and whoever has followed fundamental research consistently has definitely made significantly more money. And we have got several examples in terms of the very Warren Buffetts and the Grahams of the world, where they are among the richest people in the world as of now, right? So that's basically what I had to say on this, on the markets, as well as why we feel fundamental research is important. And basically this is all contained in the book, the various reasons for fundamental investing, techniques, how to use it, and the other techniques which are to be used in terms of investments. So that's all from my side. Thank you very much for your patient listening. Thank you.
Thank you very much, Gokumar and Deepen. We'll now firstly throw it open to the house, to all of you guests who have joined us here. Kindly raise your hand to whatever question you'd like to pose to the table, and we'll have the mic coming across and accommodating your questions. So kindly raise your hand and we'll take your questions.